Welcome everybody back to our webinar series Learn to Trade the Market. My name Stefan Friedrichowski, as always at that time. Today is the 7th of March 2017, 2 o'clock German time. So everything as usual, and I see participants as well as usual. So it's good to have you back here within our webinar series, and thanks to ArgosFX who make that webinar series possible for all of us. As you know, I have always to remember everybody to the risk warning, so you know that whenever we talk about trading here, when you do finally your own trading activities, you do it simply by your own, but that is quite obvious, and I think you understand quite well as well. So what will be for today, since I got a couple of emails once again, hey, don't go too fast, please recap a little bit more and practice the real trading activities, because that is something you may have in focus. At least that is what the emails are telling me. So therefore, what I do today is simply the recap of last week, a little bit more trading practice with our new trading setup, the weekly breakout setup, and what we will do is some more trading activities, especially with that trading setup, which is I think a good one, because it's suitable for everybody who has not that much time. So it's more for the weekend and late afternoon or evening traders. So because simply what you would have to do is to have to order or to place some orders maybe already on Sunday if the market is open. So if you are quite late on Sunday, but you can do it on Monday morning or even Monday evening, or like we today, we do it on Tuesday lunchtime. So still that is good for that type of trading setup. But when you know that we have other trading setups which might be a little bit more active, and we will have a short view on those trading setups and trading opportunities as well. So what we did last week was that we introduced the weekly breakout, and let me recap how that works. So in principle, the setup is based on weekly candles, or especially what we do is we look for the last week candle, and that candle is already passed. So everything is known. We know open, high, low, close of that candle, and what is important for our setup is simply the high and the low of that weekly candle. What we want to do is that for the then new week, we want to have in principle two orders, one buy stop at the high of that weekly candle and a sell stop on the lower end, meaning at the low of that weekly candle. But normally we don't place two orders because we use an additional trend filter by the indicator EMA, and we use simply the 200 period. And what we use there is that we look for the candle, the weekly candle, and ask ourselves, is that EMA below, above, or in the middle of the candle? And from that result, it depends what kind of orders we will place. So if the complete candle is above the EMA, then we only place the buy stop order. If the complete candle is below the EMA, then we only place the sell stop order. So we use the EMA as a preferred direction, so to say. And only if our EMA goes quite through that candle, then we place both orders, and then the two orders are meant to be OCO. OCO, by the way, means one cancels the other. So finally, if one of those orders will be activated, will be filled, and that is the right wording within trading, that an order is filled. If one of the two orders is filled, then we cancel, we delete the order on the other side. So of course, every trading setup needs a stop loss, and in this case, we use 1/3 of the total range. So the total distance between the high of the weekly candle and the low of that weekly candle, we use 1/3 of that range as the stop loss for this trading setup. And in this case, we need a little bit higher risk-reward ratios, and that means that we go for a risk-reward ratio of 5. So the take profit is 5 times, has 5 times more distance to the entry than the stop loss. We have a couple of additional rules just to protect ourselves. If we have a so-called inside candle, which means that the previous week candle lies completely in the next previous candle, then we use the next previous candle as a range. And the second rule is that if an order is not filled until the next weekend, then we delete that order. What we use there is some additional trick within MT4, because we can always, for pending orders, we can set a so-called expire date and expire time, which means that by the broker itself, that order will be deleted at a certain time. And if we have already a running trade on a specific underlying, then we don't place a new order for that setup. So that are the basic rules. But let's first have a look to the results of last week. And of course, then we go on a little bit more with practicing what we have done. So let me look here to the account history for our English webinar. And by the way, right now, I go back to the trades here. You see that we cover up to now, but only on equity up to now and not on balance. And the difference between those two is the balance is excluding all ongoing trades, so all closed trades are calculated, and all those together with our initial deposit builds a so-called balance. And the equity, and you see that that number is moving around simply because that contains or is based on all ongoing trades as well. And since we have two trades ongoing, one long trade on Brent oil, and we have a short trade on British pound US dollar, and you see within the account here that one of those is a little bit in the minus and the other one is quite well behaving, so that looks good. So that ongoing order is running well, and that British pound US dollar trade is based on that breakout scenario. So the trade has been activated. You see here late in the evening at the 28th of February, and is still ongoing. So let's see what the final result will be. But there has been an additional trade, and the additional trade was a breakout trade on S&P 500, and that trade has finally reached the take profit. So therefore, by the way, you see the green here for the take profit. That means a trade has reached take profit, and if the trade has reached a stop loss, then that will be marked in red. So that trade has been activated in the morning of the 1st of March, and already at the late afternoon of the same day, the trade has reached the take profit. So works well, but nevertheless, that is not a real statistic for that trading setup. But we have one closed trade with that trading setup being in the take profit, and the other one is still running. So that is a trade on British pound, US dollar to the short. What does it mean? For that specific trading setup, we will not look for British pound US dollar because there's an ongoing trade. So trading on those is, let's call it, forbidden. We have a quite old order on the sell limit on Euro US dollar, and today I want to get rid of that order. So now that symbol is ready for any other trading activities. So looking first to what we want to do here, new breakout trades on a weekly range. We can use any symbol, but not Brent, although that is on a the trade is with a different trading setup, but we will not use Brent and British pound US dollar. Before I go to the next trades and how to derive finally those trades, let me first once again show you the other slide with naming the nomenclature for our comments in MT4. Because we have a new one here for that breakout scenario based on a weekly candle, and that gets the naming breakout W1. And for that trading setup, we use a fixed stop loss based on that 1/3 of our W1 candle, and therefore we have the suffix underscore fixed in order to have every trade with the same naming if those trades belong to the same trading strategy or trading setup. So first, what we will use here is breakout W1 underscore fixed. If we go on with practicing trading activities here within that setup. What I personally have prepared, you know that we have different kind of profiles in order to get all charts quite well here and looking always the same. So I have prepared one additional one, and that profile is running under the name overview underscore W1, simply because I can use that one already for those weekly breakout trades. And you see that I have within every chart, and I have zoomed a little bit more into those charts, I have always that EMA, and sometimes the EMA is outside the current window. And now we get it back here for Euro US dollar, and for those two here we have them as well outside. And let's have a look on British pound, even if we don't trade the setup here today. I think it's coming from the north. Yeah, there it is. So it's already far away, but we will not trade British pound US dollar with that setup. So now it's time for trading once again. So what we use here, we zoom maybe a little bit more into those candles. We know that for S&P 500, we will only trade to the north, only if we hit the upper limit, so the high of that previous candle, we would open a trade. And so what do we need? We need those numbers, high and low, for that candle, S&P 500. And you see I have my mouse right on that candle, and that means on the bottom line of my MT4, I can realize those numbers. And by the way, you can, I think there's another possibility. Sometimes it pops up here as well, but now it will not pop up. So that means we can get those numbers, and the high is at 2400.3, and the low of that candle is at 2357.5. So that is a total range of that candle, and we will place an order. I can show it already here by line. We will place an order exactly here. So it will be a buy stop order, of course, and it's only a buy stop order because we want because the complete previous W1 candle is above the EMA, therefore we only trade into the direction to the north. And now we have to calculate stop loss and take profit. And we used our standard Excel sheet for that purpose once again. And you might remember that we have something here as well, just to calculate the stop loss for a given range, for a given high and a given low. And those two numbers have been the high and the low. And now you can see that we will have a stop loss distance of 14.124 points. And you see already I have indicated the stop loss value here for a long trade, and for a long trade the stop loss value will be at 2386 and 0.17. Having that number already calculated, we can calculate the risk for that trade, or better to say, we can calculate the lot size for the trade. And as always, we have first to look for the right contract size, and contract size for S&P 500 trades is 1. The S&P 500 is a value in US dollar. So what we need is the exchange rate Euro-US dollar. And let me check where we are right now. So we are at 1.058 about. So I can even leave that number. So that is the exchange rate for that trade, and our entry is the previous, the high of the previous W1 candle, and that was the value, and stop loss has been calculated to 2386.17. And you see, okay, we want to trade with a risk of 50 euros, and that means in this case that our lot size is only 3. Why I go for 3 and not 3.74. We cannot trade those kind of numbers for S&P 500. We can only trade integer numbers, and I always go down, so not to 4. In this case, I go for 3 lots of S&P 500. And we want to trade that kind of setup with a risk-reward ratio of 5, and that leads to a take profit of 247095, and that is a take profit for that specific trade. So now we are ready to place that order, and as always you press F9 or you go through that kind of menu here, and we can place a new order. But first have a look always what kind of order do we want to place. And in this case, we want to place a pending order. And the type of the pending order is a buy stop order. So we want to trade to the north, and only if the price hits the high of the previous W1 candle. And now we can place whatever is needed here. So we need a volume, and the volume will be 3, and the stop loss for that trade is 2386.17 with a take profit of 2470.95, and we want to have a comment on the trade, and that trade runs under the name breakout W1 fixed, because the stop loss is, let's say, based on a fixed number on that 1/3 of the total range, and the entry price is 2400.3. We want to have an expire date here. Once again, I mentioned it already, expire date means that the order will automatically be deleted, and let's do it at 6 something, and now we can place the order. Everything looks right, and the good thing is for pending orders, we have always a second chance to review our own trade. And what I will do here always is I will first have a look to the stop loss value, and the stop loss value here is 40 euros, because we have not that odd number of lot size 3.74, so a little bit lower, and therefore we don't have exactly 50 euros, but a little bit less. And we see now that we have a take profit somewhere here above, and that is, so take profit looks quite far away, but remember, last week trade has reached take profit, so why not this time as well? Let's see. So everything is settled here, ready for that trade. It's already in our order book here, and you can always see those pending orders below balance and equity, so we can see that trade is quite well here. That's all. That's the weekly breakout trade for S&P 500. In this case, I will not have a look to the DAX value, but we can move forward here within our list, and let me go as fast as I can, and as fast you might follow me here with all those activities within the next couple of weeks of that webinar. So going to the right means I'm now at gold weekly, and here we have the situation. Okay, in principle, the EMA is going through last week candle, so in principle we would set 2 orders, one buy stop at the high and one sell stop at the low. But what you can see here is that in principle, if I would have done everything already on Monday morning or on late Sunday evening, then at least now the short side would have been activated already. It's extremely tight. Let me have a close look here where we are. So the low of that candle, and I write that number already down, is at 1222.65, and the high of that candle is at 1263.66. And right now the price is here at 2173, and it has been already at 1220.96. So the situation is that way, that in principle the trade would have been already activated. And now we can ask ourselves what to do. And it's a pleasure for me to have that example here, because I have not mentioned it specifically in the introduction of the trading setup. So in principle, the trade is already running. It would be slightly in the profit zone right now, but only slightly. So what can we do now? And my answer is simply, I will not go market right now, going short here, no. What I will do is I will place a pending order, but at least if the price stays as it is right now, so already a little bit below our entry level, then I place a sell limit order. So waiting, hey, maybe the price goes a little bit back to the north and will take and will fill my order. So yes, I will place an order, but finally, after calculating everything, I have to revisit the situation. Is the price below my potential entry level or above? And then it depends whether I place a sell stop or a sell limit order. So, but of course, we have to calculate our trade. So let's do it here once again. So we have a high of the previous W1 candle of 1263.66 and the low 1222.64. So that is a range. We know the stop loss, and we want to place a short order. So because we see our chance on the short side. So stop loss for that trade would be 123618. And now we can calculate our risk, or better to say our position size, contract size. Okay, let me put it here as well, because the gold is this symbol, and it's traded as Brent with a contract size of 100. Just to remind you where to find that number. So here, symbol, specification, then you get the contract size here, the 100. So that's right, what we have entered here. So contract size is 100. Gold is based on Euro, US, or on US dollar. So we need that exchange rate as well. So our entry is at 1222.65 and stop loss is 1236.18. And let me check that number as well. Yeah, it's right. And so finally, we get a lot size of 0.04 lot size, and a take profit of 1160. Yeah, that's a nice number here. So that's the order. So we can place that order as well with an MT4, but we have to look, are we currently above or below that threshold? And we are below, so it will be a sell limit order finally, but hopefully it's, as long as I need to place an order, still the same. So it's a pending order, and that pending order is a sell limit order, because we are right now a little bit below, and let me always check that here. Okay, and comment for that order is breakout W1 underscore fixed, and stop loss for that trade is 1236.18, and take profit for that trade is 1160. 1.00, sell limit order, and it goes at entry price of 1222.65, and we want to have an expire for the trade as well on Friday afternoon, late Friday afternoon. So I go for 6 o'clock here as well, and now I can place that order. Check everything looks right. So order is placed. We are really quite close to that order, so we need a little bit up movement first, so that our order gets filled, and then we would go to the south, at least in order to get a profitable trade here. So looks good, looks nice. Order is placed, and let's see what happens with that trade as well. So going here to Brent, I will not open an additional Brent trade because I have already a Brent trade running. That trade belongs to a different setup, so it's not really a final reason to say no, not two trades on one underlying, but for me personally, that is enough. And if we trade several trading setups, then it's, let's say, allowed to have multiple trades. But if you don't like it, so as I do, then I will not place an order here as well. So let's have a look for other underlyings. So Euro, US dollar, for example, and we would go to the south because the EMA is far above our complete previous candle. So I can zoom here back, and we know that we would go to the south. So that's not that close, so there's plenty of time to place that order, and we can get all the numbers necessary for the trade. I click on that previous W1 candle in order to get the high and the low in the last line of MT4. High is at 106.298 and low is at 104.939. So that's all for that trade. What we need, and you see it's not very complicated with our prepared Excel sheets in order to calculate everything right. So the high of that candle, low of that candle, and you see it gets faster and faster doing so. So we have our stop loss for a short trade here being calculated to 1.05387, and we can calculate our position size for the trade. Contract size, now we have a Forex trade, don't forget that. We have the right exchange rate already entered here. So entry at the lower end, so it would be 105.939, and with a stop loss 105.387. And we get, because that candle was not that big, we get a little bit higher position size of 1.11 with a take profit of 10.2699. And by the way, we go for short trade, and short is with respect to the swaps, the preferred direction. So that's good. So we have the swaps on our side, so to say, and we can place that order as well here. So we have here Euro, US dollar. We want to place a new trade, a new order, and so that's all we need here. And lot size in this case was 0.11. And we want to have a comment once again here, and that comment is breakout W1 fixed. Execution is not market. No, it's a pending order. And the type is a sell stop order. And we want to have an expire here as well. So the expire will be once again Friday around 6. And that is here. And now we can place all the numbers for that trade. So entry of the trade is 104939. And we have a stop loss of 105387. And a take profit of 102699. Checking lot size first, looks right. Sell stop order looks right. So everything is right. So I can place the order. And let's do the double check here. So it looks as 1/3 of the previous candle. Looks right. Stop loss value. Let's have a look here. Yeah, close to 50 euros. And I've not checked it here for the gold trade as well. So I will check it now. And we see looks right. It's a little bit above. But it's still within our typical limits. So everything looks good. So order is placed. Let's see what happens. And by the way, up to now, our gold trade has not been activated up to now. So let's do one final order here as well. And I will only do one at least right here. So I have still open Euro, Japanese yen and US dollar, Japanese yen. And let's have a quick view which one would be a little bit more close being potentially activated. Then you see US dollar, Japanese yen would be the one to the north. EMA is below the previous W1 candle, so the candle of choice is this one here. And let's go quickly through the numbers. So high is at 114740 and low is at 111682. So we want to place buy stop order on that candle here, and it goes quite well and fast with our Excel sheets. So high is this one, low is this one. It will be a long trade, so the stop loss is at 113730. And with those numbers we can calculate all the rest. Now we want to trade US dollar, Japanese yen. So we need the exchange rate Euro, Japanese yen, which is at 120.6. So 120.6. And our potential entry is at 114.74. Stop loss calculated 113.73, and now we have a little bit lower lot size, 0.05, with a take profit of 119.79. So that's all, and we are ready to place that order as well. So you see it's running really fast here. In order to get those trades up and running. And we come already closer to our potential entry here. So let's place that order as well. For this setup, it's a new order. And now we can do what we need to do, starting with the lot size of 0.05. and we want to place a pending order, a buy stop order. So pending order first, and then we can select the buy stop order here. And once again, we want to have that expire so that we don't have to care ourselves for that trade. So it's easier to do it automatically via MT4 and via the broker. So breakout W1 fixed, that's a name for the comment. And now we can place all the numbers. So stop loss is 113.73. Take profit is 119.79. And the entry for that trade is 114.74. So that's all. Lot size is right. Looks good. We can place the order. So that looks right. We have a take profit. We have stop loss here of about 50 euros. That works. So everything is right. Everything is running. So let's see what happens here. So since we have a little bit of time still, so I want to revisit our previous setup, and you might remember what is the other setup, and we can look for trades for that setup as well. So now let's have a look here. So the previous setup was multiple EMA, and in that case we use 4 different EMAs in order to look for the current trend and the strengths of that trend, and whether we are in a correction. And if that correction occurs, then those 4 EMAs will constrict, will come closer together, and that would be the entry signal for such a trade. In this case, we can use stop losses via ATR or simply direct out of the chart. Still, we need risk-reward ratios in the order of 3, so I will change that for 3 if we can place an order out of that scenario as well. So let's have a look here. So I changed my profile from the weekly to the daily, so that we have all the EMAs within our charts. So overview D1 is now this profile of choice, and let us go through what we have here. So still, since a couple of weeks now, we have that enormous going up in S&P 500. Maybe right now we see a little bit like a correction in general, just looking to the overall trend behavior, but you still see that those 4 EMAs are far away from each other, so no chance. Same is true for DAX, no chance for that kind of trading setup or on a daily basis. Gold looks a little bit more promising, and you see, let me make or let me zoom here a little bit in, then we can have a closer look what we can, or what kind of situation we have here. So we see, of course, a constriction of the 4 EMAs, but just from the EMAs, the trend from the EMAs, we would maybe open a long trade, because the slowest EMA, the EMA 160, is at that value, and I try to remember 0.25, and I go 1 candle back. No, it's already going south. So now, even if you don't see it by your eyes, but by moving around with a mouse pointer, then you can see those values, and you see that the actual value of the EMA is a little bit lower than the previous one. So indeed, we would open a short trade, and we would open that trade market more or less, or we can open it market. Since we have already here that trade just placed a few minutes ago, which would more or less be exactly the same kind of trade, and look for the stop loss here, it would be a stop loss out of chart. Manually, you might put that stop loss a little bit higher, but anyhow, the trade looks more or less the same. So now, what will I do? Obviously, and I will do nothing. So let's wait here. We have already a chance, so we only need 2 points to the north, then our short sell limit order would be activated. So why going here for an additional trade? So going to Brent, you see, okay, there's already a trade running, same story. Euro US dollar. From the perspective of our multiple EMA setup, of course, it would be a short trade because our slowest EMA goes to the south. Yeah, and here, once again, we have already an order placed a little bit below, but yeah, let's wait. Let's give that trade a chance. In principle, one could open here an additional short order, but if that order would work well, then a little bit later our other order would be activated as well. So then we get a double risk on the trade or on Euro US dollar. Therefore, I will not open an additional trade. Going to US dollar Japanese yen. Okay, we have nearly the same situation in Euro US dollar. We have already the buy stop order out of the breakout weekly trading setup. So that's in line, so to say, with the multiple EMA setup. So no additional order here as well. But now we get a chance. Let's look for Euro Japanese yen. So you see, the constriction looks good. What we can see as well, here we have a slight increase within our EMA. Good. So it would be a trade to the north. That looks like an opportunity. So we can place an additional order here for out of the multiple EMA setup. And now the question is where to place the stop loss. Out of the chart, the only potential stop loss would be around here, so far below the actual price. So that is, from my perspective, a little bit too far. So therefore, I want to have a stop loss which is a little bit more tight. But what I can use here is I can use a line like this one here, but a little bit more north. Let me see whether I can activate that line. Yeah, now I get it. So in this area, I would place a stop loss here. So, and I would go here market. So 120.565 with a stop loss of 119.194. I know that this trade is a trade against swap costs. So Euro, Japanese yen. Let's have a look to the swap costs or benefits. And in case of a long trade, and we would open a long trade, we have to pay. Okay, so that's an additional reason to have a tight stop loss, because a tighter stop loss means a closer take profit as well. So we need that tight stop loss here as well. Let me see whether the take profit is too far away or not, but it looks good. I think it looks good. So now it's time to place or to calculate that order as well. And contract size is right, exchange rate is already right, entry would be at 120.565 with a stop loss of 119.194. So lot size is 0.04. And now we want to go with a risk-reward ratio of 3, and that leads to a take profit of 124.678. Good. So now we have a next trade here. And we can place that order, and that order would be a market order because the constriction looks well. So why not going market here? So that means we get a new trade, and that trade has a risk or a lot size, a volume of 0.04. We will go market. We want to have a comment here, and that comment is multiple EMA, and we take our stop loss out of chart. Therefore, it gets an underscore chart. Stop loss for that trade is 119.194 with a take profit of 124.678. What a nice number. And that trade we want to open market. So by market, everything is right. Volume, check. Okay, checked. So we can place the order. Stop loss is already here at the right level, so we know, okay, it's close to 50 euros, and our take profit is a little bit above the previous highs here, so now it comes into the chart window. You see the take profit there as well. So everything is settled, looks good. We have a couple of trades now running, and let me check here all our orders within the chart, within that MT4. I don't know why I can't move around that distance here. Now I get it. So let me move that a little bit more up. I hope I get it. No. By the way, technically, what's the reason why I have sometimes a little bit problem here? Because I do those trades on a server, so I'm remote on a Windows computer. That computer, I don't know where this is, but I know, yeah, that computer is in United States, and if I have that webinar software running, which costs a lot of internet traffic, and then moving around a remote computer is sometimes a little bit tricky to navigate here within that Windows. But anyhow, you see, we have our trading activity goes up. We have now 3 trades up and running as we speak, and we have 4 additional pending orders. All of those are have an expire, and by the way that those orders have an expire, you can see via that mouse over functionality. So if I go here on a specific symbol, then you can read the expire time already, and if you do a double click, then you can even change that expire, for example. So everything runs, everything looks good, at least up to now. So let's see what finally comes here. Obvious or honestly, I don't see an additional trading opportunity by myself. I'm just looking to the charts here. No, I would not say that I know the specific charts here with all those symbols. Looks well. There might be something within DAX, but then we need a little bit more down movement first before I would personally go on the long direction here. So no chance as we speak. Good. So orders are placed, and I hope you know a little bit more details about that breakout setup based on a W1 candle of the previous week. You know how to calculate the stop loss for that setup. You know how to get the order direction, and yeah, we have done a few example trades today together, and hopefully you can go by your own as well. If there are questions, then of course, please get in touch with me. Use that email address, friedrichowski@argosmx.com, and then I can try to help you as fast as possible. And I will help you. And so it's really a pleasure for me to help you here. Good. That's for now. 4 weeks before the official end of that webinar. But anyhow, I wish you a good day and a good week. Next week, by the way, everything as always, so same time, same place, and next trading setup. And that trading setup is the so-called lead leg strategy for Forex pairs. And that will be the final one out of that webinar series here. Good, but that's next week. Have a good time. Bye-bye.